We are going to gain insight into the strategy that separates the 5% of winners from the 95% of losers. So you are going to want to stick around to the end of this video because I'm going to be exposing the truth of this market. If you haven't subscribed to the channel already, go ahead and do hit that subscribe button to never miss another video. So there are three main concepts when it comes to being able to execute this strategy profitably and consistently. Those are supply and demand, which are commonly referred to as order blocks. There is structure and different types of structure. You have order flow and trend, and then there is liquidity. Now you need to understand them all individually and then all together as well. So if you don't catch everything in this video, I will make an individual video for every single topic where we will dive deeper into each one. For the purpose of this video, I'm going to give you an overview and give you everything together. So with that said, we're going to first start with structure, right? The king of the market. We all know that, when price is trending, it makes higher highs and higher lows. Or when price is trending bearish, it makes lower lows and lower highs. And essentially this allows us to understand, what direction the market is going. But where many people get confused is the multiple timeframes that we actually have available to us, because they might check one time frame and it's going down, and then they might check another time frame and it's going up, and they're like, is it going up or is it going down? And that's something that we specialize in, and that is one of the biggest keys, if not the biggest key. No, it is the largest key in our tool belt. Understanding the fractal nature of the market, understanding trend within trend of timeframes. So let me give you an example. If, for example, the 4 hour is bullish, but it's coming to put in a higher low, collect more demand, and take out the high. In this area of price, right here, if we go and perceive that on the lower time frame, then of course it's going to look bearish, right? Price is going to be making lower lows, lower highs, lower lows, lower highs, lower lows, until finally it gets to the bottom and then changes. But until that happens, it's going to look like that, right? Bearish. And so by understanding the higher time frame, and then we can understand the lower time frame, we can understand them in each other. So if we zoom out right now, literally just zoom out, it's that simple, and we understand that price is what? Bearish. But what it looks like when you actually just zoom into the price leg on this time frame is what? Bullish. So when price shifts, which it does right here, then price has shifted bearish. So that's the first thing to understand, is structure and order flow within each other. That's the first key, because that's going to allow you to understand the direction in which the banks are pushing the price into. And then you're going to understand, exactly that, like where is price going to? And then when you come inside, it's the same thing. It's like, okay, this low puts in this high, and this high breaks it. So now we have a change. So what's that called? That's called a realignment. That's where the lower time frame trend aligns with the higher time frame trend. That's the first key to understanding smart money concepts, smart money trading, and being able to trade profitably. The next one is supply and demand, also known as order blocks. These areas of price are essentially explained by understanding where does the volume come into the market. Now there's a certain criteria, because supply and demand is everywhere. So there is a specific criteria that we do teach to understand the correct supply and demand zones, because that's a big differentiation. Supply and demand zones are everywhere, but picking the correct ones, there is an exact criteria. And that criteria for us is it has the volume, of course. It has to break something, right? There has to be some significance as to why we would use that. So we can see right here, we have the break of structure. So here we are aligning supply and demand with order flow, with structure. And then we want to understand, okay, well, we want to pull out our fib, because we only want to be taking trades that are in the top premium section of price when we are selling. Okay, it is that. It needs to break something. Okay, it does that. It's the origin. Okay, it needs to have liquidity. Okay, we have liquidity, which is our third and final concept. Liquidity is another word for money, liquid money, literally. So think about any time there is an entry or a stop loss from a trader or a bank or, smaller institution, that is what we call as liquidity. So you look at trend lines, double tops, support, resistance, all of these tools that are built here. The algorithm is being trained to understand and facilitate those in and artificially create them to induce liquidity. They are literally designed to make people bet their money on thinking they know what's going to happen, and actually it is designed to do that because it knows your stop losses are above here. And so we understand this and we use this because we want to know where to stay out of the market and also where we can target in the market, right? So those are the three concepts. Simply explained, we go into much more detail in our premium content that you can find in this YouTube video description if it's something that you are interested in. It goes way deeper than that and there's more to it, but overall that is essentially all it is. And it is simple. You just have to understand how to work exactly what time frames to do it. There's a strategy. There's an exact A to Z strategy. And that's what our premium content is. Whereas here we are explaining you the concept. You can go ahead and use this and discover your own strategy and test different time frames, and you can build something amazing just by understanding the laws of the market. And that's exactly what we are here to teach. So you can see that the order flow has shifted, right? The order flow is bearish, and now the trend inside has also shifted bearish. It was bullish, high highs, and now we have a lower low, which tells us what? Yes, exactly, we have shifted. And here is a unmitigated level of supply because price has not yet come back to visit that. Because usually how it works is the banks, the algorithm will first break, the high to induce buyers, induce liquidity, and then take the liquidity out. But now those buys, because this is all of them really, all the volume is really from this same algorithm. It's a multi-trillion-dollar market. It takes a lot of capital to move any single one of these candlesticks, even these tiny ones. It takes billions of dollars. So we know it's the central authority of, the banks. They buy to clear out liquidity so they can free positions to take to the downside. That's the technical thing. You don't need to know that. You just need to be able to see it for, what it is. So, yeah, we have level right here. Those buys to sells, if they just buy and sell, but then never bring price back, well, all of those buys will be running in a loss, right? Banks don't use stop losses because, well, they don't need to. They control the market. So they're always going to be able to move price to where they want it to go to. So they don't mind holding big drawdowns on their balance sheet because they know at some point it's going to be, break even. And that's the point of it. So essentially what they will do is they will bring price back to break even, not before building liquidity first. And then once they bring it to break even, then they can just continue and do the same again. And that's why price often moves, like this, because they initiate, mitigate, initiate, mitigate, initiate, mitigate. And so we're just essentially following the bank's footsteps and getting involved. We aren't creating anything new here. We're just understanding what is actually happening. And so if you was to trade this type of move, you would be able to literally put your entry and stop loss on this exact candle right here, because this is where the volume comes in and it has imbalance, which is the first and third wick don't meet and there is a gap in the middle. And until that gap gets filled, it's imbalanced. And we know about imbalance is that it will get balanced at some point. And so you look down here, you have all of this imbalance, imbalance that's going to get filled. And we know that the order flow is bearish. So at some point, these lows are probably also going to get taken out. And there's a 1 to 36.67. Now, our first target would be this one because it's just structure. Structure is king at the end of the day. It's made a lower low. Now it's going to make a lower high and a new lower low. And essentially all we're doing is getting in on that move, quite literally. And so first take profit would be at this level. And if you just play price, you'll see the liquidation event. We liquidate the sell side liquidity. And then also on the back end of that, there's the breakout traders. They see this trend forming. And when it gets broken, they have buys open because they're expecting, okay, that short-term trend has been broken, it's going to go back up. That's a clear manipulation from the banks. Yes, manipulation. It is real, guys, and it is exact. And you can see, like, it's very clear to see. You hit your first take profit, and then for, yes, 12.3R, and then you can have your, eventual take profit down here at 36, because it's the fractal nature, right? You already know that the likelihood is that those lows right there, at some point or another, these lows right here, at some point or another, will get stopped out, will get taken out. Now, whether it happens now or in the future, or, if buts or maybes, that doesn't necessarily matter. What actually matters is that, at some point they do get taken out. And that's why we do, of course, take partials at the most logical areas, and then we can leave these on kind of emotionless, because the last thing you want to see is price running in profit and then pulling back on you and you giving your money back to the market. It's not good for psychology. So taking profits is just a very healthy thing to do, and also you'll never go broke taking profits. And so, guys, that is a wrap. Essentially, that is the concepts of smart money concepts, and we will go deeper into these concepts, very deep in these concepts, in our premium content, and we will also bring out some YouTube content